Hey, we're back again, Earning and Spending Part 5. We've been looking at how to earn money and the taxation on it, and now what we want to do is to look at what's involved in spending it, and here's a burning question right here. How they work out what to charge you. When you buy an item, what's in it, how much profit has been added, what percentage mark on or markup have they got, and how far will your dollar go. That's what we want to look at now. So this is about GST, goods and services tax, profit involved, and some of the excise, and that's a form of tax, which is placed on various items. So come on down and let's have a look at how it all works. Here's a little flow chart I got for you here. Now, when goods are made, because you're going to buy things down here, you are going to buy things from the retailer. So you purchase from a shop, which is called a retailer. Now, where do those goods come from? Well, there's usually two stages before that. There's the person who makes it, then there's a distributor or a wholesaler, and then there's the retailer. And down here at the bottom is what everybody wants to do. The aim is that the manufacturer, wholesaler, and retailer all make a living. What is the purpose of each person here? Well, first of all, you've got to have someone to make the goods. Now, because they're so busy making the goods, usually they hand them on to somebody who is going to be a distributor or a wholesaler. So their role is to make available to shops, the retailer, all the goods that they might need, right? And they can distribute them. They'll bring them to the shop and distribute them. Okay, and the retailer, their reward is for displaying them to you and making it easy for you to purchase. Okay, rather than going right back to the factory and going there and trying to buy it in a factory situation. So everybody's got a role here. Sometimes you might have seen an advert like, cut out the middleman, direct from the manufacturer. And that's the idea. If somebody is allowed to purchase direct from the factory, I don't know, warehouse door sales like in wineries and stuff, you can purchase items direct from the manufacturer. What that means is you're cutting out this part of the distribution here. And so you should get it cheaper, because each of these groups here must make some money so that they get paid for what they do, and that is to pick up the goods, take them somewhere else, somebody displays them, and then you can easily choose a range of them. So they are the roles, and you can see here that could cause an item to be quite a bit more expensive as you come down here. Okay, let's look at it in more detail. Now, this is fairly complicated, and we won't be doing all of this in this course. Screen clippings here from Hayes and Harris, their textbook of mathematical applications. So have a look at that as well. So here we go. Let's come over here, and let's say there's a manufacturer making jeans, and the cost of making a pair of jeans is $40. They need to be rewarded for their work. People have to be paid, etc. So they're going to add a profit of 25% of 40, which is a quarter, which is $10. Okay, so now the item is costing $50, but you must apply a GST. Now, we haven't seen this before. GST stands for Goods and Services Tax. Now, this is another tax the government uses to help run the country, in addition to income tax, which you looked at in earlier presentations. This is a tax that is charged on most goods and services available to you. So it will be charged, it's 10% usually, 10% charged on the final price. So there's an extra $5 here, which is going to be charged therefore. Okay, now this goods and services tax is really aimed at more luxury items, not food and basic services that we need at the moment, but it's on things like jeans or clothing that isn't perhaps absolutely essential. Not all items, though, suffer this goods and services tax, but just another tax to help run the country. So what's the final price that the manufacturer would sell to the retailer? Notice here we haven't got a wholesaler in there. The manufacturer is directly distributing it to the retailer. Okay, that's quite unusual because quite often in the middle you'll have a wholesaler who will take from various manufacturers different brands of jeans, and then the retailer can choose what they want. Okay, so that's how the role of the wholesaler. But there's no wholesaler here, so we've cut out one of the middle people. Okay, so here the retailer has to pay $55, including GST there. Now that GST goes to the government, goods and services tax. This goes to the government. Okay, now the retailer now has to sell it to you. All right, so what's the basic cost to the retailer? It was $50, and the retailer can claim that $5 back from the government. Okay, they can claim that back in their taxes at the end of the financial year, an input tax credit. So in other words, the government is not going to take 10% several times, because they're going to do it along here. Let's go along here and have a look. So the basic cost was $50. The retailer wants a profit, so add 20%. That's $10. Okay, so now they're going to sell it at $60, but it's a goods and services, isn't it? It's goods. So the government wants 10% of that, which is 10% of $60, which is $6. So the final price, 50 plus 10 plus the GST, that's the GST in there, is $66. Now just notice that the government really only gets that $6 GST because this is given back over here to the retailer when they claim at the end of the financial year all the taxes that they have paid in the middle there. Okay, so the government actually only gets the goods and services tax once, right down the end here. But your price has actually got 10% of the final price there, included in that. Included in that is the GST. So this looks quite complicated, doesn't it? The chain of events here, they're all going from the manufacturer through to the retailer, and then you're down here, you're a price sold to the customer. Okay, so that's how it works. Remember, everybody's trying to be rewarded for their effort. The manufacturer's got the costs, and then the people have to be employed, and they've got to make a living, so they've got a profit there, a percentage, here it is up here, and then a profit down here. Could I just make a note here that the profit is usually greater than 50% of the cost. They usually add more than half as much again. And the reason for that is because manufacturing and wages in Australia have to be paid, electricity has to be paid, and usually you have to add on more than this 20%, 25%. You have to add on at least 50%, okay, usually, to make a business run at both levels, both at the level of manufacturer and at the level of the retailer. So let's do some little sums down here a bit more practically, let's say. $40 would become, 50% more, $20 more, would be $60 at the manufacturer's level. Then we'd apply the GST, which would go to $66 back there. Then we go to the retailer, and their basic cost was $60. They'll claim back the $6 of GST at that stage. Then they add their 50% of 60, half 60 is 30, so that went to 90, right? And then they would add 10% GST, which is going to go to 99. So that's a little bit more realistic. By the time you get the goods, they've more than doubled with GST and so on. Okay, so that's a bit more realistic. Because of the overheads in running businesses, power bills, wages, insurances, this is it. The profit at each level is more like 50%. Okay, So you can see, if you go back to the manufacturer, try to get purchases direct from the manufacturer, you're going to cut out a lot of the costs. Okay, still has to have GST on it though. Alright, are you ready to try some calculations? The maths in this isn't bad. It's mainly percentages. So come on down and let's have a look at some of the structures here. Alright, manufacturer's mark-on and GST. This is sometimes called markup. The markup, marking up the price, adding on some profit so you can run the business and pay the people working for you. Everyone's got to make a living there. Okay, generally the manufacturer will add a mark on as a percentage of the cost price. GST is then added at the rate of 10%. We just done that. So, what is the dollar mark on? How much are they marking it up? Mark on percentage times cost. So I've said to you it's usually 50% off the cost is the actual dollar mark on. So if we had those jeans going to the retailer at $60, that would become $60 plus 10% of 60, tenth of 60, that would become $66. So the mark on would be, oops, not 50%, 50% is not 66, that's 10%. 50% is 30, which is 90, so the mark on has actually been $30, 50% of the cost, okay? Sounds a lot, but you do need to have a big mark on to run businesses. Gst Exclusive Price, therefore. So what are we going to do? It's going to be the cost price plus the $30 is 90. So it's not hard maths, just keep your wits about you. Now, that's the Gst Exclusive Price. That's not with the GST added, okay? So the GST paid is a Gst Exclusive Price. That's $90, and times 10% of that, or a tenth of that, that's the GST, is $9, and the final GST inclusive price is $99, 90 plus the 9. The maths is not too bad, just as long as you keep your wits about you. Now, you are not allowed to, when you're selling goods, to quote the GST exclusive price. Back when this first started, people were doing that, saying, well, here's the price of your jeans, $90, GST exclusive. So you come along and you think, well, I've just got $90, I can buy them. And then they say, oh, we have to add the GST. Little trick to make it sound cheaper. That is now illegal. You can only quote the final price including GST. You're not allowed to trick anybody into thinking that the price is 90 and then we'll add a tax to it at the end. That is now illegal. So keep that in mind now. Okay, so let's have a look at, can you do some? Let's do another example from Hayes and Harris here. So we'll just bring this one up. Okay, a pair of shoes costs $150 to manufacture, 20% mark on, and then of the cost is added. What will a retailer pay including GST? So let's work it out. 20% of 150, $30. So it'll be added on. Added on is 180. Then you've got to do GST. GST is 10% of this price here, which is $18. So the final price inclusive of GST is 180 plus 18, 198. So do you want to write those steps down now? Note them down in your book, perhaps. Okay, so that you can see. Now, there is an easier way. I wondered if you thought, as we went through, that you might be able to do better. Here it is here. We're dealing with percentage increases. So we could use multipliers. So if 20% mark on is applied, you could multiply by 1.2, because you've got one lot of the cost plus 10% or 20% profit, 0.2 of the cost. So that's equivalent to 1.2 lots of the cost. That's where the multiplier comes from. So maybe instead of finding 20% and adding it on, just multiply by 1.2 and go straight to the final answer. Okay, we'll have a look at that in a minute. If 10% GST is applied, multiply by 110%, so you've got 1 times the price, one lot of it, plus 10%, which is 0.1 of the price. So the final answer is 1.1 times the price. That's the idea. You want to do that. Let's do that example again. So the GST price is the cost price plus 20%. Go straight to it without actually calculating the mark on. So multiply by 1.2, 120%, 1.2. The only disadvantage of this is you have not directly, no direct calculation of the actual dollar mark on. Okay, you haven't actually got that. No direct calculation. So you'd have to then take these two away to see what it increased by. That's the difference. What about the GST? Take the price with its mark on, there it is, 180, and you want 10% more. So you multiply by 1.1 and go straight to the answer. Okay, and there you have it. Or you could go from the beginning right to the end in one fell swoop if you didn't want to know the intermediate prices. In other words, $150 with 20% mark on and 10% GST. What's the final selling price? There it is there, all in one calculation. So how tricky do you want to get? It is handy to use this multiplier idea later on, and we'll see that again. Okay, here's a chance to do your first problems, and here they are. Here we are, just applying 10%. So just go through those and check your answers. Try and set it out. So setting out is very important so that you can keep track of what you're doing. It's also important if you're doing tests and stuff, so that if you don't get the final answer correct, then the marker can go back and see how where the errors were. You might only lose 1 mark, but if it's all a mess with your setting out, you can't see how many errors, you might lose quite a few more marks. All right, pause the presentation, have a go, and I'm going to show you the answers now. Here are our answers coming up. All right. Let's move on and see what other calculations we need to do to reach those final prices and to understand what's really happening. Okay, a bicycle has been sold to a retailer for $462. Uh-oh, that already has GST included in it after a mark-on of 40% on the manufacturer's cost. And I told you this is more realistic, this markup or mark-on. That's more realistic. To cover the costs of making these things in Australia, you do need quite a bit of a markup. Okay. Oh, they want us to go back. They want us to go back and find out what the price was before GST was added, and then to work right back to the manufacturer's cost price from a final price in the shop. Okay. So, what can we do? This is going in reverse or going backwards. We have to reverse all the steps that we did before. So let's look at what we did. The final price inclusive GST was the price before that with the mark on times 110% or 1.1. So we need to remove that, divide by it. That's like a little mathematical equation here. The exclusive price before GST was times by 1.1 to get 462. To get the GST exclusive price, we will divide by 1.1. Okay, so the price before GST was added was $420. So the final price was 462 minus 420 is 42. Notice you can't just take 10% off the final price, because the 10% was based on the original GST exclusive price. So you actually have to divide by 1.1. That's a little bit of a tricky do there. Okay, so we found out what the price was before GST exclusive price. Can we go back and work out what the cost was? So how did you get the final GST exclusive price before you added GST? It was the cost price plus 40% or times 140%. So this is a mathematical equation. The 420 was the answer from doing the problem, cost price times 1.4. To get the cost back again, you will divide by 1.4. Think of the maths of that. A little bit of maths there. We're saying to get the 420, the cost was times by 1.4. Therefore, to get the cost back again, you'll reverse that and divide by 1.4. Fairly simple maths there, but think about it. So 420 divided by 1.4, the cost was $300. So we can actually work out if the cost was 420, if the final price, exclusive GST, was 420, what was the mark on? Take off the cost, we can actually find the dollar mark on, or markup. So they were marking their goods up $120 there. Okay. Alright, so let's have a look then at doing some. Here's some down here. Try to follow the same pattern. Use the same setting out. Just 4 little problems there. Try and get your head around each of the stages, okay, of what we're doing. Okay, let's go and have a look at the answers now. Here they are. Alright, how are you going? Getting some right? Alright, let's have a look now at moving more into the GST and some calculations there. So, quite often people say, well, how much is the government getting from this? What's the dollars that they're getting out of this? Okay, so here's calculating the GST paid. The prices of goods on shelves in shops must include the GST. I told you that. The final price that you have to pay should be listed. They can't say when you get to the checkout, oh, we've got to add GST. That's illegal. Okay, so what is the amount of GST actually paid? The rule of 11. Here we go. So here's a little rule for you. The actual GST paid in dollars is the GST inclusive price divided by 11. How does that work? Well, let's have a look. The GST inclusive price on the shelf has been increased by 10%. Because, so the price on the shelf is 110% of the original price. Now, how much of that is GST? Well, it's 1/11th, isn't it? You've got 110%, and of that, the extra 10% is GST. Notice you can't just take off 10% of this, because the 10% was of the price before that. So 10% is what? Divide that by 11. Alright, and you get 10%. So in other words, the actual GST is 1/11th, not 1/10th of the final price. It's 10% of the price before it, remember. Cost plus 10% of the cost equals the final price. GST included. So you can't take off 10% of this. It was 10% of the previous value that was added on. That's what we're trying to find, or go backwards. So this final price, it's actually 1/11th of that to find the actual GST added. So there's a little trick. You might write to note that down. Okay, put that in your notes now, to actually go back and find the dollar value of the GST. So here we are. Watch is bought by Frank for $135.30. He wants to know how much is the government getting. Okay, so if you divide by 11, it'll give you $12.30. You could do it another way, like we're doing before, a little bit longer though. If you said that's GST inclusive, that was the cost times 1.1 divided by 1.1 will give you the cost. Okay, so if you divide by 1.1, you get the cost. And then if you say, well, if we get the cost, let's have a look at what this comes to. This comes to 123.30. That's the cost. This is a long way of doing it. Then you could take that away from 135.30. No, sorry, this comes to, I think, 123. Let's just work this out again. So 123 is the cost. Yep. and this then taken away from 135 would give you the final answer of $12.30. Okay, now that's a bit longer way, so that's like doing it before. Work out the cost, subtract it from the final price to work out what that GST was. So it is easier to use the rule of 11 to go straight to the dollar value of the GST. Do you get that? So you have some choices there. Try to think about and discuss with your teacher and other students about what's going on here. Okay, it's a fairly simple process, but you can get lost in the maths if you're not sure of what's happening. Let's try you out on some problems now. Okay, so here's some tricky do's down here in these bottom ones, but have a look, pause the presentation, and just do the reverse there. You've got to watch some of these here, these last two, because it says about the GST added, and we're going to ask you how you work that out and work backwards, okay, on whether all items include the GST. So read it carefully. A bit of a trick here. Not all the items would be perhaps subject to GST. Okay, so have a look. And then come down here to this little one as well. Okay, same thing. You're asked to read a docket. What was the total of the bill? Some basic questions here. Okay, and just note, are all items subject to GST? Okay, read the bills carefully and see if you can work out. There are some tricky do's in that. All right, we'll have a go at those. I'll show you the answers now. Down the bottom, there we have some answers. So it does get a little bit tricky when not all items have GST added. Okay, so businesses have got to keep their wits about them, because basic food items are not subject to GST. More luxury items, soft drinks and that, which are not sort of what you absolutely need to live, are subject to GST. All right, let's go down and do a little bit more and see what you think. Are you getting powerful here? All right, here's another tax. Oh, excise duty. Okay, this is a form of tax. It's a tax levied on certain commodities like petrol, alcohol and tobacco. This is always an argument, isn't it? Because petrol we all need for travel on public transport or in your own car or vehicle. And people question, why is there such a high tax on petrol? Because it's such an essential. GST is applied more to luxury items that you really don't have to buy. And that's fair enough if you can afford to buy them. Again, you can afford to make a bigger contribution to the running of the country. Remember, that's that progressive tax idea from earlier presentations. But here, petrol is fairly basic to us all. So it's got a pretty high excise or a tax on it. Alcohol, well, that's probably not a bad idea, because we shouldn't drink too much alcohol, and it is a luxury. And again, tobacco. Okay, and that's being increased since this book was published. There's quite a high excise on tobacco. They're trying to encourage people to smoke less, or don't smoke at all, because it ruins your health. The same with alcohol, though. Okay, so these excises may be increased at two different points in the year, halfway through the financial year and after the end of the financial year, if you like. In line with rises in inflation and so on. We may talk about consumer price index later on, but not in this presentation. Okay, so here we are. These are the excises applied back in 2007. They're a lot higher in these days now. Okay, so beer exceeding 3.5% by volume alcohol. Okay, so there's no tax under 3.5%. Okay, what is the excise duty? $38.20 per litre of alcohol, calculated on the amount by which the alcohol content by volume exceeds 1.15%. So first of all, if the beer is over 3.5% by volume alcohol, then you are charged $38 for every litre of alcohol, right, which exceeds 1.15%. Fairly complicated. Spirits, higher in alcohol, exceeding 10% alcohol, then it's $64.72 per litre of alcohol. So you've got to work out how much alcohol content there is. And then you charge per litre. Not per litre of the actual drink, per litre of the alcohol content. So the maths of this can get a bit tricky. Cigarettes, not exceeding 0.8 grams per stick of tobacco. So it's per stick of tobacco. Okay, so it's on the tobacco content there. Unleaded petrol, 38 cents a litre. It's higher now. Okay, and that's what people are critical of. Okay, why such a tax on a commodity that we all basically need? Okay, and the answer is, could the government reduce this? Well, how much would they lose? How much would they then have to run the country? That's the thing. They work out, hey, if we lose that tax, where will we get the money we need to run the country? Okay, which involves all sorts of things. Maintenance of services, helping people with social services, all the costs involved there. So, can we run the country if we reduce any of these? That's our problem at the moment. All right, let's go down and see how to apply some of this to the stuff that we buy. Remember, we're trying to buy stuff here now, and seeing that we've still got tax floating around. Okay, calculate the excise duty payable on a 700ml bottle of bourbon. That's a form of whiskey containing 37.5% alcohol by volume. Okay, it contains more than 10% alcohol. So here you go to that next bracket. Okay, so let's go back up and have a look. Contains more than 10% alcohol. So that's this one here. Okay, so as with all the tables we've been doing in all these presentations, you've got to find which one applies. Okay, so $64.72 per litre. But we better find out the alcohol in one bottle. 37.5% by volume of alcohol, 700ml bottle. So it would be 262.5 mils of alcohol. So we've got to take that as a portion of a litre. What fraction of a litre have we got? And then we multiply by the cost per litre, or the charge per litre. So don't forget, it's not per mil. You must make the mils a fraction of 1 litre, because that's the basic measurement that they're charging for. $64.72 a litre. So the excise is $16.99. So therefore, a bottle of bourbon retails for around $35, and in that, the excise would be $17. So it's about half of it. Half the charge goes to the government. That's what they're saying. Oh, and these are old prices, 2007, I would guess. But they're saying, well, note that a bottle of bourbon retails around $35, but hey, the excise was $17. Oh, so don't drink. It's too expensive. That's not good for you anyway. Calculate the excise duty you pay when filling a 60-litre tank with unleaded petrol. Okay, the excise payable at the moment is all that per litre. Times 60 is $22.89. So in your tank, when you're filling it in these days here, back in 2007, nearly $23 went to the government. Okay, so it's quite a heavy excise duty there. Okay, you want to try and do some for yourself? Come down here now. 1D3. Calculate the excise duty payable on the following items. Okay, so you've got to go back and look at the tables. Look at the table on excise duty. Okay, and work through it carefully. Each one is in a different category, and you've got to read the category and try to work that out. And follow the pattern that we just did with the setting out. Remember, the setting out is important so that you can track the numbers. The setting out is very important. Okay, and then with the second problem, same idea. You've got to actually have a look at of what's going on there. Okay, so in this one, old price there of petrol, we want to go backwards and calculate the percentage of the total price that excise duty contributes if unleaded petrol costs $1.15. So remember your multiplier idea there. You're trying to go backwards. I'll leave you to do that. They're fairly challenging, that one there, because you've got the final cost, which includes excise. So you've got to divide by a multiplier. See what you can do there. Okay, might have to ask teacher about that one. All right, let's have a look at the answers now and see what you can do. There are some answers. All right, have a go, and good luck with that. You're starting to get into a good position to understand all of earning. We've done that, but of spending now, when you spend your money, of where it's all going. And not only out your pocket, but into many other pockets as well. All right, it's cheers for now. I'll catch you a bit later in the next presentation.